Good afternoon. My name is James Agnew, the Chairman of Albion Crown VCT PLC. It is my pleasure to welcome you to the company's annual general meeting today. I'd like to introduce my fellow directors, Pam Garside, Ian Spence, and Tony Ellingham. May I also introduce Emil Gigov, a partner of Albion Capital, the company's investment manager. Emma will shortly give a presentation on the results of the company for the year ending 30 June 2024. Moving on to the formal business, the quorum for the AGM is 2 members entitled to vote in person or by proxy. I can confirm that this has been met, and therefore I declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so we'll take the notice as read. Due to the success of the previous year's virtual AGMs and to maximise engagement with shareholders, the board has again arranged for the Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in a question and answer session and voting on the board's proposed resolutions. Before I hand over to Emil for his presentation, I would like to explain how the voting process will work. But let me first state that if you have already submitted a proxy vote to the registrar, you do not need to vote again unless you wish to change your vote. The resolutions will be voted on by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by your independent registrar, Computershare. Once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you wish to vote, and the option will change colour, and a confirmation message will appear to indicate that your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. Okay, I now declare the poll open. Turning to the main business of the AGM, following the manager's presentation, the directors and the manager will take questions from members on the company's financial results and proposed AGM resolutions. I'd like to thank members who have already submitted their questions and queries through to the chairman's email address. If you wish to ask questions, please select the messaging option from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of that section. I will now hand over to Emil for his presentation.
Thank you, James. May I have the first slide, please? So good afternoon to all shareholders. This is a presentation that covers the year to 30th of June 2024, and I'll just start with highlighting some of the key figures for the financial year. The company achieved a total shareholder value per share of 0.68 pence, which is just over 2% based on the opening NAV. The company paid 1.61 pence per share of tax-free dividends to investors. This is in line with its dividend policy of approximately 5% of NAV. And at the year end, NAV per share was 32.2 pence. Overall, since the start of the company, shareholders have received total value of 101 pence point 99. Next slide, please. Before I go into the details of the financial performance, I'd like to set out the background so that we can put the figures and commentary into that context. We're all familiar with the various geopolitical and continued economic micro uncertainties in the world, specifically, the wars in Ukraine and the Middle East, the tensions between China and the US, the elections we've had in the UK and the US as well. All of these various events have created an atmosphere of uncertainty in the corporate world, which has resulted in lower M&A activity, as well as longer buying cycles for some of the larger corporates to which our customers sell their products. As a result, we have seen through the portfolio that some of the customers, some of the portfolio companies have had elongated sales cycles and generally a harder environment in which to grow. Nevertheless, our portfolio focuses on mission-critical products and services, and through that, it's designed to provide an element of resilience through the economic cycles. Against that background, we are encouraged by the return achieved for the year, and we look forward to the next financial year with optimism. On this slide, I'd also like to highlight that the sunset clause for the VCT scheme was officially extended for an extra 10 years, and I'm sure that the shareholders will welcome that, as it creates more certainty around the whole VCT regime and our ability of the company to continue operating. Next slide, please. Now, this chart shows the return that the company has delivered to shareholders over 1, 3, 5, and 10 years. You have heard me speaking previously that we see venture capital trusts as long-term investment vehicles, and we tend to look at the 5- and 10-year return as the true measure of performance. If we then take the stated objective of paying a 5% tax-free dividend to shareholders, our aim is really to cover the dividend and cover it with some margin. We've managed to achieve this on a 5- and 10-year horizon. We haven't really managed to achieve this year and on a 3-year horizon either. Clearly, the future will prove whether we'll continue being able to deliver the returns that we set ourselves as our objectives. I'd just like to highlight here that these figures here are stated excluding any tax advantages, excluding any tax relief the shareholders have received on their initial investment. So this is really based on the money that we've invested through the company. Next slide, please. Now, the key highlights in the year, in terms of fundraising, the company raised 7.3 million, which was less than the previous year, and that was driven not by demand, but actually by the funding requirements that the company had. Indeed, the top-up offers closed prior to their final date, and they were oversubscribed. The company delivered 2.8 million of exits, which was ahead of the previous year. Still, we need to consider this against a difficult M&A environment. The key exits included the sale of Ophelos and a part disposal of Quantexa, and I'll come to talk about both of those later on. Our investment rate continued to be strong. We invested a total of 9.4 million compared to 7.9 million in the previous year. It splits broadly 50-50 between new companies and existing portfolio companies, and this is very much as we've designed our strategy to be. Share buybacks were 2.6 million against 2.4 million in the previous year, very much in line with what we would expect of a VCT company of this size. And dividends paid were 4.5 million, very much in line with the 5% dividend objective. Next slide, please. Now, what are the key drivers for the financial year? Quantexa remains the biggest company in the portfolio, and it continues to grow strongly, which is good to see. The company recently announced that it's reached $100 million of recurring revenue, which is fantastic given that when we backed it, it had less than £1 million of revenue for that year at the beginning of our investment. Egress achieved 1.2 million. The company has, since the year-end, been sold. Indeed, the sale completed on the day immediately after the year-end, and it delivered a 7x return on cost, which was a very good exit for the shareholders, and we're very pleased with that. Against that, we have written down the valuations of Shawnee River Hydro and Big Data. Shawnee River Hydro is one of our renewable energy projects. It is held for the long term. It is a great generator of income to the company. Its valuation is measured by a discounted cash flow method, and that was impacted in the current period by two factors. One was the higher discount rates in the marketplace, and the second factor was lower forecast power price assumptions. That was the principal driver for the reduction of the valuation. With Big Data, the company is performing below the budgets that it set itself, and hence we've taken a very prudent approach. We have actually written it down in our books to a very small amount of less than £100,000. So we don't expect any further write-downs to come up from these particular investments. Indeed, the company continues to have the opportunity to grow and deliver value over the longer term. There were a number of other write-ups and write-downs. Some of them are listed here, but all of them you can find in the annual report and accounts on pages 27 to 29. So overall, the portfolio delivered a total positive return of £2.8 million. Next slide, please. Let's look at the portfolio a little bit more closely. This is an analysis by value and looking at the sector breakdown of the portfolio. You will see at the top right, the green segments is cash and net assets, which represented 20% at the year end. Very much where we want it to be. 20% cash holdings is a comfortable amount of cash to have to ensure that we can continue investing in new opportunities. We can continue backing the portfolio companies that perform best. And we can also continue paying dividends and effect share buybacks. The biggest sector in terms of investment portfolio is the fintech sector with 31% as of the year end. This particular segment includes our investment in Quantexa, which is by far the biggest investment in the portfolio. So that has a big weighting there. Software and other technology represented 19%, up from 13% in the previous year. Healthcare, which is mostly digital healthcare these days, represented 19% of the portfolio. And then renewable energy at 6% and other, including our education investments, constituted 5% of the portfolio. In total, it's a well-diversified portfolio of 66 companies, employing something in the region of 4,600 people, predominantly in the UK. Next slide, please. We also look at the portfolio in terms of stage of investment. And here we look at two separate metrics. One is revenue generation, and the other one is the number of employees. Both pictures show a similar kind of picture overall. I would just focus on the one on the left, which is the revenue generation. We have three definitions here: the early stage investments, which we define as companies with less than £1 million in revenue. Growth stage of £1 to £5 million, they represented 18% of the portfolio. And then the vast majority of the investments by value were the scale-up investments, those with revenue over £5 million. And they represented approximately 75% of the portfolio. And this is a very good illustration of how our investment strategy works, as we tend to back companies at the early stage, continue backing those that are performing well through the growth stage until they mature to be larger scaled up businesses. So we stay with them through numerous rounds of investment and therefore, work with them as they progress to maturity. Next slide, please. As a result of this, we expect and we do have some concentration in the portfolio. So the top three investments represent just under 30% of NAV as at 30th of June 2024. And of these three, Quantexa is by far the biggest, with book value of just under 20 million. We first invested in the company in 2017. We backed the business when it was still very small, with approximately £1 million of revenues. It has recently announced that it's generated $100 million of revenue. So it's grown significantly and very well. Revenue growth of more than 50 times since our initial investment. Employee growth from approximately 30 to more than 750 these days. It is the star company in the portfolio, and clearly the concentration into that particular asset is a product of its success. The other two companies in the top three are Provica and Oviva. Provica is our specialist pharmaceutical company that focuses on children's medicines. We first backed it in 2012 and have continued backing it in further rounds of investment. Originally, the company had one product in the marketplace. It now has several. It has started with pre-revenue at the time of investment to 16 million and over, currently grown from 4 to 60 people and continues to grow well. Oviva is another technology-driven healthcare company. In this case, Oviva provides services for medical nutrition therapy. We backed it in 2016. It has grown just over 2 times, continues to grow very rapidly, currently at over 70%. So in total, These three companies, which represent approximately 5.2 million of investment cost, have delivered approximately 6 times return to 29 million. Next slide, please. So at this stage, I'd just like to remind ourselves of the investment strategy of the company. We invest in C to Series B, that is from early stage to growth. We back long-term trends and we back growing markets. We focus on business-to-business products and solutions. We have very limited exposure to consumer-facing companies, and this is by design, as we believe that it smooths some of the effects of the economic cycles. And our principal 2 areas of investment are software and healthcare, and in this case, it's healthcare technology. Both of these are fairly broad and give us exposure to a number of sectors indirectly of the economy. Next slide, please. So I mentioned that the company made 10 new investments in the period. Here are the 5 largest. I'll speak about Trifera and Open Dialogue in a little bit more detail in a minute. But we also invested in Instinct, which is a communication platform for the asset management industry. Papaya Global, which is a very interesting multi-sided marketplace for the participants in the electric vehicle ecosystem. That is fleets that use electric vehicles, those companies that service them, and the providers of the asset themselves. And Cato is an interesting business that digitizes the workflows of commercial real estate agents. It's a sector that is a laggard behind other industry sectors in terms of digitalization and adoption of technology. And Cato is looking to address this. Next slide, please. So Trifera, those of you who came to our shareholder event last week would have seen the company present. It is an AI-enabled data management platform that provides transparency and accuracy to nature-based reporting. So what do you mean by nature-based reporting, nature-based assets? These are typically forests or crops, fields with crops or other natural resources such as water resources. And Trifera puts together sophisticated algorithms with satellite imaging, drone imaging, and other data, some of which is proprietary to its customer base, to make sure that all of these assets are continuously monitored, risk assessed as needed, that supply chains are proven in terms of the provenance, and there's a number of other use cases that the company is able to satisfy. It has had a really good growth since our investment. It is now a multi-million-pound company. When we invested, it had tiny revenues. The Albion VCTs invested 7 million pounds across our Albion stable, of which Albion Crown invested 1 million. Next slide, please. Another investment was in Open Dialogue. Open Dialogue provides an AI agent management system to companies, specifically those companies that operate in highly regulated industries. It has a very important specialism here because the companies that operate in highly regulated industries have additional levels of demand on the way that they deploy AI into their businesses. They need to have the right guardrails and make sure that the AI agents that they use actually are verifiable, traceable, auditable, etc., etc. And that creates a lot of extra complexity, and Open Dialogue is able to provide them with the right tools to enable them to satisfy those complexities. The Albion VCTs invested 5 million pounds, of which Albion Crown invested 700,000. Next slide, please. As is our strategy to back our winners, we also invested in a number of follow-ons. These are just some of them. Panacea is our provider of cybersecurity systems. Gravity is a specialist API management platform growing very strongly. Imandra is our provider of automated software testing and enhanced learning for artificial neural networks. And Runa, previously trading as WeGift, is a cloud platform, an infrastructure that enables corporates to issue digital incentives and payouts. Next slide, please. We made 2 sales in the period. We had a full exit from Ophelos. Ophelos was a company that used machine learning to create a process of managing consumer debt, i.e. debt collection in other words, which they did in a very ethical and efficient way. The company was growing very well, and it attracted interest by a quoted company from Sweden called Intrim AB. We sold the investment, delivering just over 2x cash-on-cash multiple, 1.1 million in sales proceed. Importantly, this investment was held for less than 2 years, so it was a quick result, and it was the right time for company to find a buyer. Next slide, please. I talked about Quantexa and its weighting in the portfolio. You will recall that Quantexa is valued as just under 20 million pounds in the portfolio, so a significant concentration in this one asset. It is a company that's growing very well, but nevertheless, as fund managers for the company, we are always cognizant of concentration risk, and we look to manage it as and when we can. The partial sale that we've achieved reduces that concentration risk, even though we were only selling a small amount of the investment. We generated proceeds of 1.2 million on an investment of 125,000. This was a great multiple of invested cash achieved, 9.4x cash-on-cash achieved multiple. The buyers of this small stake was a group of financial investors who invested through vehicles managed by Albion, thereby leaving the voting rights to be exercised by Albion, and therefore leaving us as Albion to continue having significant influence on the company. We're one of the across our VCTs, and these new investors, we are one of the biggest shareholders in the company, and that level of influence is to the benefit of all shareholders. We also exited Egress, which I mentioned early on. It is not, we do not have a slide on this because it completed after the year end, but the Egress sale achieved a 7x return and proceeds of 2.3 million. Next slide, please. I'll just briefly touch on ESG at Albion. We continue working across all 3 verticals of ESG: environmental, social, and governance. There's a number of activities and actions that we're continually working on. I'll just point out one here that we are particularly proud of. This is under the social basket, you know, the Radia Accelerator. The Radia Accelerator was started by us and some partners in this venture as a program to help support women who want to be entrepreneurial and set up their own businesses. It is a well-known statistic, sadly, that women are very underrepresented in entrepreneurship and in starting new venture businesses, and we're looking to address that with this program that is working with ambitious women to help them start their own businesses. The program was recently shortlisted for a number of awards, and we'll continue working with it in the future. Next slide, please. Now, most of you will be aware that there are proposals in place to merge the Albion VCTs. Out of 6 current VCTs, we are aiming to create 3 larger ones. Albion Crown VCT is looking to merge with Albion Venture Capital Trust to create a vehicle of approximately 150 million pounds of total assets. There are a number of reasons and benefits to doing that: cost savings, simplified fee structures, reduced administration, both for the funds and for you as shareholders. We think this is generally for the benefit of everyone. There will be an annual general meeting or a general meeting to approve the proposals on the 11th of December at 2 p.m. We're encouraging shareholders to vote, so please use your electronic votes or come to the meeting, which will be held electronically. You will find all the materials at the Albion Capital website under albion.capital/mergers. Next slide, please. I would also like to mention our top-up offers, which open on the 6th of January 2025. The minimum investment will be 6,000 with 2,000 per VCT. We're looking to raise funds for the 3 resulting larger VCTs. Albion Crown VCT is looking to raise 20 million with a 10 million over-allotment facility. In total, the Albion funds will be looking to raise 50 million with a 30 million over-allotment facility. We're also offering the early bird discount, which many shareholders will be familiar with from previous years. It is capped at 10 million for cleared funds. For those of you who want to participate in the early bird offer, I advise you to be very quick, because in previous years it went and it was filled very, very quickly indeed. You will find all the details of the offers again on the Albion website at albion.capital/offers. Next slide, please. I mentioned voting a couple of times. Again, we encourage shareholders to vote, to exercise their rights for voting. There are two options to do that, either before the general meetings or during the meetings. For those of you who can attend, you will be receiving emails from our registrars with instructions on how to vote. It is very simple and only takes a few minutes to exercise your voting. Next slide, please. And this leads me to the final slide of the presentation on the annual results, the prospects. As I mentioned before, VCTs are by nature long-term investment vehicles. We back innovation, we back growth, and that takes time to produce returns. We focus on mission-critical products and services, which are designed to provide a level of resilience through economic cycles. We have limited exposure to discretionary consumer-facing sectors, and therefore we have constructed a portfolio which we believe provides potential for long-term returns as it matures, despite the ongoing uncertainties in the marketplace. It's a well-balanced portfolio across target sectors, and all of that makes us feel positive about future value creation from this portfolio and from this company. Next slide, please. The company has just announced its first quarter results for the current financial year to September 2024. NAV was 31.47 pence. This was regrettably a decrease of 2.3% compared to the 30th of June NAV. And it reflects movements across quite a number of portfolio companies with valuation declines outweighing increases. So there were no single investments that we can point to that actually drove most of that. But in total, the reduction in value of the portfolio was 2 million in aggregate across quite a number of companies. Most of them with small write-downs. There were a few write-ups, but not very many write-ups at this stage of our assessment of the portfolio performance for the financial year. The first dividend of 0.81 pence at 2.5% of NAV per share is payable this Friday on the 29th of November. And I'd just like to mention our annual shareholder seminar that took place last week on the 20th of November. It was extremely well attended. Thank you for those of you who came to join us. We had many shareholders in the room and some very interesting discussions. This is the end of my presentation, and at this point I'll hand back to our chair, James Agnew.
Thank you, Emil. We've received a number of questions from shareholders, and therefore, given the time allocated to this meeting, we'll only be covering the substantive questions and we'll amalgamate some into themes. I'll now invite the questions from members. The first question that we have is a question about why we can't have an in-person AGM, and it's a good question. Whilst the board and your directors very much do enjoy meeting our shareholders and interacting with them in person, we found that the virtual format allows us to reach a larger number of shareholders, so it's more efficient in that regard. I do note, and as Emil mentioned in his presentation, Albion hosts an annual shareholder seminar in person, and that also offers an opportunity for our shareholders to meet and engage with the wider team. So I hope that answers that question. The second question we have is whether the directors considered during the year if a different VCT manager may produce a better return for shareholders. Again, this is a point that the board is actively considers and monitors on an ongoing basis the performance of the fund against benchmarks, and the conclusion that we've come to is that we're very satisfied with the results that Albion have produced for us, not just this year, but across the cycle and through the longer term. The next question, a couple of questions, is on administration and management fees. This question is, why has the board approved an increase to the management and administration fees this year, I think if we need to go back and look at the context of this, the previous arrangements had been in place since 2005 when Albion took over the management of Crown Place, as it was then called. Those fees have therefore been in place for 18 years. And over that period, the size, the number of holdings in the portfolio and the complexity of the company has increased considerably. Therefore, the board thought it appropriate to review the fee arrangements, and we undertook an extensive benchmarking exercise to make sure that what we were agreeing was in line with the current market rates of the venture capital trust industry. So following that review, there was a slight increase in the management fees of 0.25% to 2% of NAV per annum, and an increased administration fee, which is 0.2% of NAV, with a minimum charge of £50,000 and a cap of £200,000. The second question regarding fees is a question about why we've agreed to base the reference on RPI, even though that has nothing to do with any form of investment activity. And again, I think it's important to note that there's two elements to the fee structure or fee arrangements with Albion. The management fee is not adjusted for inflation, so that is 2% of NAV. It's the administration fee of 0.2% is also not adjusted for inflation, but it is, as I mentioned before, subject to a cap and collar of £50,000 and £200,000 respectively. And those will be subject to a wider inflation review every 3 years, and the board will look at a wide range of inflation measures when considering those fee arrangements. The next question we have is on Quantexa, and this is a question is, why has the valuation increased, and to whom was part of the investment sold to reduce the portfolio concentration risk of this holding? Will, I wonder if you could address this question if you're able to.
James, certainly. So if I sort of break that question into its two parts, the first was why has the valuation increased in the period? And I think that speaks to the point that Emil made. This is all about the trading performance of the underlying company, and that has continued to grow strongly and actually has exceeded, as recently announced by the company, the magic number of 100 million ARR, which is your annual recurring revenue. So that in the world of software is a substantial milestone and reflects really good performance. So it was considered appropriate that the underlying valuation of the investment should reflect that strong performance. In terms of the transaction that happened during the year, again, covered in a slide by Emil, which is specifically around the desire by the board and indeed the manager that we should manage concentration risk within the portfolio. Quantexa is a very substantial and by far the largest investment in the portfolio. And with the agreement of the board, Albion undertook an exercise to see whether we could reduce concentration risk by doing a partial sale of the holding. And it was in that process that we spoke to something like between 20 and 30 potential investors. And the population of investors who would acquire what is a relatively small stake in terms of voting rights is quite small. So you can consider 20 to 30 to be quite an extensive marketing exercise. And and ultimately those were all financial investors. So we identified people that really understood it, and importantly, who sets the price. So whilst we continue to, we manage the two investment vehicles that were involved in the transaction, the price was actually set by those financial investors who were private equity house and family offices.
Thank you, Will. Got a couple of questions here on the merger proposals. The first is, why are there two classes of shares for the Albion Crown VCT? So the background to this is that the proposal is that Albion Crown merges with Albion Venture Capital Trust, and the Albion Venture Capital Trust shareholders will be issued with a new class of shares in Albion Crown, which will be the C class shares. Then in time, in November of 2026, the intention is to convert those C class shares into Albion Crown ordinary shares. So the existing Albion Crown shareholders will retain their Albion Crown shares. The background to this is that Albion Crown has a greater exposure to more mature technology investments within its portfolio as compared with Albion Venture Capital Trust. So this period of time will allow the two portfolios to become more aligned when the conversion takes place. The second question I have on the mergers is, do the mergers have any effect on the tax reliefs already obtained on the original purchase of shares? And the short answer is no. The original shares in the target VCT, if they're qualifying, they will remain so. In respect to the at the same time and cost as when they were originally acquired. I have a question here on the portfolio. Given the autumn budget, an increase in employers' national insurance and a higher tax environment, what is expected to be the impact on the portfolio? Emma, would you like to address this one?
Yes, absolutely. Thank you, James. So tax increases in the budget and their effect on the portfolio. National insurance tax increase obviously will have some impact on the cost base of our portfolio companies, but we don't think that's going to be particularly material. Typically, our companies, at the time of investment, will employ somewhere between 20 and 50 employees. And given all the costs that they have on the P&L in terms of not just salaries, but other expenditure, we think that the impact is going to be minimal. So we're not particularly worried about that, even though it's going to have a small impact. What we're very pleased about, though, is that the research and development tax credit scheme was retained, and that's a really important scheme for the younger technology-driven companies that we invest in. Provides them with significant incentives, cash incentives to continue investing in their products, and actually is a significant part of the kind of cash flow income for many of our companies. So we were very pleased to see that that's actually remained in place, and that kind of stimulus to growth was retained by the Chancellor and the government. So overall, on a portfolio level, we don't see any issues coming out from the budget.
Thank you, Emil. We'll now continue with the formal business of the AGM. The full text of each of the resolutions were set out in the notice of the meeting, and the board is recommending that members vote in favour of all the resolutions. I will briefly summarise these now. The first resolution is to receive and adopt the company's accounts for the year ending 30 June 2024, together with the strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration report for the year ending 30 June 2024. The third resolution is my own re-election as a director of the company. The fourth resolution is the re-election of Pam Garside as a director of the company. The fifth resolution is the re-election of Ian Spence as a director of the company. The sixth resolution is the re-election of Tony Ellingham as a director of the company. The seventh resolution is to reappoint Johnston Carmichael as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which audited accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. The ninth resolution is to allow the directors to allot shares. The 10th resolution is a special resolution to give the directors the power to disapply preemption rights. The penultimate resolution is again a special resolution to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The final resolution provides the company with the option to have a 14-day notice period for a general meeting, should this be necessary. That concludes the summary of the proposed resolutions. I can confirm that voting has now finished, and I now declare the poll closed. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as reasonably practical. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. As you will note, the proxy votes are comfortably in favour of the proposed resolutions. Thank you. That concludes the business of the AGM. I would like to thank all members who have joined this AGM by webcast. The board welcomes any feedback you may have, which you can do so by sending an email to crownchair@albion.capital. There being no further business, I declare the meeting closed, and on behalf of the board, thank you for joining our company's AGM.